Hello and welcome to Hot Money on Bloomberg Quint Live, India's first digital live streaming business news service. This is a show which gets you a complete wrap of all the stocks that are buzzing in trade. I'm Darshan Mehta. Let's welcome our experts then on the show. Vinit Bolinjkar of Ventura Securities, T.S. Harihar of HRBV Client Solutions, and Kalra of Target Investing join me on the show. Thank you to all my guests for joining me on the show. Today on Hot Money, we'll discuss stocks like HUL, the acquisition that they did recently. What does it mean for them? The next stock that we want to discuss will be Motherson Sumi. Because of Donald Trump's tweet, yes, the counter did manage to rally. Is it time to accumulate? PVR has been on a rally of late. Will the rally continue? And one mid-cap stock, we've seen that large caps have participated, but mid-caps haven't participated so much in the recent rally. Is it time to start accumulating some quality mid-caps? So that's something that we'll talk about. But firstly, the big one, and that is HUL. The counter rallied to record highs in trade yesterday after the company acquired certain assets of GSK Healthcare. Valuation-wise, it was done at a 6% premium to GSK's price. But what does this mean for HUL? Is that any concern, or is it the way ahead going ahead? What's the way ahead for HUL going ahead? We'll ask our guests. So, Samir, what did you make of the acquisition that HUL did? It rallied yesterday. Now it's trading flat in trade. What do you make of the acquisition?
So I think it's a neutral for me right now, because if you see the shorter term, I see more negatives. If you see the eventual result of it, and then 5 years later on, HUL saying that we took over Horlicks and we did this, that's a positive for me. But two negatives which I have, or which I think are the most important right now, is why was Unilever willing to go down and the promoter stake to take on to Horlicks? Was it the growth which it will give? Second is the tax implication. So if calculated, I think there will be a 700-800 million tax implication on the whole thing. So that has to be seen. So that cash outgo will be eventually there. These are technical. If you see on the spread wise, the GSK markets are constrained. It's not the product is something which can grow. I think it's not about that limitation. The limitation is the market is saturated. Now if it's a saturated market, the growth rates cannot be like beyond a certain point, which is a challenge to HUL and the OTC products, which are 5-year limited contract right now. So I think these four things I'm much more cautious on, because HUL's valuation itself is very high right now. So I would stay away from it.
Okay, so basically you're concerned about the share swap that happened. You thought it would be better if Unilever had bought it out and then transferred. What's the concern there? See,
the concern is if the promoter is ready to give up its control in a listed subsidiary in India just to buy on a certain deal. I don't know what they have thought. It's better to give out certain amount of cash, because right now if they dilute the stake and give a royalty, so royalty GSK is getting from Horlicks is 4.5%. Now if you take that 4.5% from HUL also to Unilever, then you're diluting your stake also, you're taking a payout of a royalty also, then I think this becomes more negative for HUL.
But GSK has already said that they will, once the deal is over, they will sell off their stake. So there's a chance that
they'll sell off their stake, but the point is at what point, where, and who'll buy it, that's more important.
Unilever can buy it. But Vinit, what did you make of the deal? Are you happy, or are you having similar concerns?
No, I'm pretty happy, because I think at the end of the day, deal is EPS accretive, and we have to understand that GSK had about 1.8 million distribution points. HUL has about 7. So premiumization, small sachets and all, they can grow the market and penetrate deeper. So I think also in their F&B business, they get leadership position. So I think that's a pretty good deal, and I'm quite happy with the deal.
What about the share swap and the premium that's paid to Glaxo, and this clause that says that certain products will be only sold for 5 years? What happens next? Will they be able to grow the market so much in the next 5 years that?
So I think the products which are the OTC products, they are more like a cash cow. So you'll have 5 years of annuity income, and it will go away. But I think the malt beverage category and India's burgeoning population, which is 50% below 35, and newborns will be growing at a higher growth rate. So I think that will help to grow the category also. and it will provide HUL with a established brand to introduce new and different kind of variants of products.
Okay.
So that is what I think, because if you see, HUL follows a very umbrella branding strategy. So you'll have Dove, you'll have products underneath that. So when they get this brand which is well established, they can do a lot of variants in this, come out with newer products.
Okay.
So you're paying for a brand, you're paying for distribution, and you're paying for mindset. So I think when you do such a large acquisition, there is a premium paid out. And it's justified.
Okay, justified. What about you, Hari? What did you make of the deal? Are you happy or concerned?
We like the deal. I think a couple of points. See, the acquisition becomes important because I think GSK really could not invest in expanding the market share as far as the health foods were concerned. If you look at the health drink segment, broadly it used to be Boost, Complan and Horlicks. Then I think about 15 years back, Pediasure came into the market, and then Pediasure has taken away a very large chunk of the premium baby foods market. So I think what has happened is the original players like GSK and Amul have actually kind of stagnated around those levels. So that is, I think, has been a major issue. Now I think with a much larger distribution network that Hindustan Lever has, I would believe that should change and they should be able to get a larger market share. That is. Secondly, as far as the price paid is concerned, I think it's a very marginal premium, so I don't think the price is too high. Second thing we also need to understand is that if you look at it historically, whatever acquisitions Hindustan Unilever has made, be it Brook Bond, be it Lipton, be it Ponds, I think they are the one company that has managed to integrate acquisitions beautifully.
Okay.
Most other groups have had problems, be it Tata Motors, be it Tata, they've had a lot of troubles. This is one group that has integrated acquisitions quite well. So I would believe that medium term it should be positive. Short term, valuations could be a concern, but medium term I think it should be positive for the company.
Okay, and you believe that HUL, like the other acquisitions, will be able to turn around this acquisition?
Yes, absolutely.
And what about valuations of HUL? Are they now it's trading at record highs? If someone is looking to invest in the company, should they wait for a correction, or this is the time to start accumulating?
No, it's hard to wait for a correction. I would still say probably adopt a phased approach to buying, rather than wait for a correction, because you never know, it will go to 2200 in the next 3 months. You don't know. I think, see, a stock like Lever, you always make money over a longer period of time. So I don't see any harm in buying now. But probably if you want to invest, let us say X, then put half X now and half X at a later date. But I don't think you should wait too long to buy the stock.
Okay, so that's the view that's coming in on HUL at this point of time. I think two of our guests are pretty happy with the deal, and they say that there could be more potential upside. Samir has a little bit of concern as far as some of the points of the deal is concerned. But the next stock that we want to talk about, and that is Motherson Sumi. Yesterday rallied 6%. Again, today is doing well. Yesterday, Donald Trump had tweeted that imports into China will not be carrying any tax for cars, and that was pretty much a big overhang that was there in some of the cars and car supplier to the Western world. So does this move the needle big time for Motherson Sumi, or was 6% enough for the news that came out? No doubt Motherson Sumi has been a marked underperformer of late. It's fallen significantly from the highs, but what's the way ahead? Are valuations now comfortable? Are news flows on the positive side for Motherson Sumi? That's something that we'll ask. So Hari, I'll start with you. Motherson Sumi has corrected significantly from the highs. It's down 50% on a one-year basis. No doubt they have some concerns, but is the outlook looking better for Motherson Sumi?
See, I think there are broadly two phases of Motherson Sumi. There is pre-2015 and post-2015. Pre-2015 was before the Volkswagen, the entire diesel issue kind of boiled over. I think that was a time when Motherson Sumi, quarter on quarter, year on year, was delivering on the numbers, aggressive growth. It was able to deliver time and again. I think post-2015, the entire sentiment has changed around diesel cars. So that has actually had a big hit on companies like Motherson Sumi. But I would believe that with the 50% correction we have seen in the last 1 year, at least I don't see the downside risk, and we have been telling people around 150, 155 levels that the downside risk is not high. It's hard to say how high it will bounce or how soon it will bounce, but definitely I think the downside risks at these prices are too low. So I would believe that if you are an investor with about a year and a half perspective, this should be a good level to probably buy.
What's the outlook ahead? Because scenario doesn't seem to change. If someone is investing in Motherson Sumi, what's the potential trigger point for Motherson Sumi if someone's
See, I think the big trigger should be the truce that we have seen between China and US, and at least for the time being, if the trade war comes to an end, I think there should be a revival as far as auto demand is concerned. And we have been facing, and we saw JLR shutting down the plant because China demand was not picking up. So I think at least if that China demand comfort remains, I would believe it will be a positive as far as Motherson Sumi is concerned.
Okay, Vinit, apart from valuations which have corrected almost 50%, are you seeing any trigger points for Motherson Sumi growth?
So in the immediate term, I don't see it.
Okay.
Because you're not going to sell cars tomorrow into China.
Okay.
Right? It will take a period of time. And if you see the standalone entity, its sales are very closely related to PV sales. And also the rupee had a lot of impact on it. But so the copper price, the cost copper which is there, was having a lot of impact. It was going down despite that their cost went up because of the rupee depreciation. So that is one positive which has happened for the company. Valuations are looking neat, but what, the market was expecting a certain amount of revenue to come in.
Okay.
And that has belied it. So and the cuts have been very steep. So the market was into a growth investing mode. And because those growth factors have not been met, we have seen stock being unloaded and there's a lot of float. So that is going to have a bearing on the stock, and if the company cannot get back to its original growth rate, I think the stock will see further selling
pressure. Are you
pressure.
seeing any triggers, at least, let's say not talk short term, but at least in the slightly medium term, are there any triggers? Because they got hit, as he pointed out, because of the Volkswagen. From that there is there, but are you seeing any green shoots coming out anywhere?
So I'm a skeptic on the stock, primarily because they've grown through acquisitions, and the acquisitions, the financials can get distorted. But once the story settles down, we will come to know the true picture. And right now we are seeing constriction of margins, revenue growth slowing down. So I think that phase of aggressive expansions is over. There is nothing new lined up. So we need to see how well there were no serial acquisitions, so you will never really know what is happening. So this is that 6-month phase where you will actually come to know what is a sustainable growth rate of the company. Once you are established with that, I think then I would venture into the stock.
Not till then.
Yes, and another concern area is that debt is going up. So these two factors are very negative for me, and I would be looking to see how the pickup happens.
What about you, Samir? What's your view on Motherson Sumi?
So we've turned a bit positive. We started buying in a staggered way. We see still the debt issue as a main crux of the whole thing, because if your revenues and the cash flow slow down because of the global automotive slowdown, I think then you have a servicing issue of the debt, and that is the main concern. But otherwise, if you see the business has external factors affecting it. Motherson specifically, it's not the only one who's getting impacted, the whole bunch is getting impacted. So I think, and it's got a 50% down. So right now it's trading around 22, 21 times. It's traded on a 5-year average of 32, 33. So I think it's a place to where you start buying in the smaller amounts. There will be a downside and there can be a downside, but there's no ready solution. Yeah, if the tariffs get revised on the downside, because today morning also China newspaper quoted that Chinese government is doing. So December 18th is where we're looking to revision of tariffs, current tariffs. And if that takes place, I think the whole stock price at least gets a relief from the system.
Okay, but what would you started buying apart from this China-US issue? What are the triggers that you feel that will?
So I think their PKC acquisition, which they did in the last year, that is helping them out quite reasonably. That has a lot of patents which are helping them on the wiring end of the business. Domestic business is somewhere stabilizing or slowing down. Because of the Maruti production also coming flat or going down eventually. So over there domestic is the issue, but if you see the PKC and there are focus on deleveraging. So if this thing happens in the next couple of quarters, I think there will be.
Okay, so that's the view that's coming in. Two of our guests are believing that it's time actually to start nibbling into Motherson Sumi. Vinit does not share the same view. It's more of a wait and watch approach. for him before he starts accumulating Motherson Sumi. The next stock again, again is a counter which has managed to rebound significantly from the recent lows. Remember, all the counters on the cinema side had fallen or because of concerns that outside food will be allowed. But a time has passed since then, and most of the stocks have managed to rebound. Of late, PVR today is down almost 1%, but of late it has given positive returns. In the last 3 months, it's up almost 13%. Will the rally continue for cinema stocks? Is there any concern? So that's something we'll ask. So Vinit, I'll start with you. Do you like any of the cinema stocks as such? It could be PVR, it could be Inox, the two listed large ones.
So we like Inox more than PVR because there's a significant valuation differential and growth rates in Inox are catching up. Having said that, if you look at the US chain and the competition from Netflix, so that has not really impacted the AIM business out there. So if we were to extrapolate the same kind of consumer behavior in India, so you would expect that the chains would continue to thrive. We are an under-penetrated market, and PVR is also coming out with a value brand through its acquisitions. So that is a positive on the company. So they are now trying to cater to the price-sensitive market also. So I think the growth story will continue. An example would be China, which was a few years back in pace with India in terms of putting up screens. They've scaled up from 10,000 to 40,000. Today they're the largest. And India has still lagged that kind of growth. So I think there is ample space for penetration. So the growth story will continue. And we have seen companies are able to pass on and improve their pricing power. So I believe that these are stocks which will be steady compounders.
Is the food issue an overhang on these stocks?
I think it's done with. So we were very skeptical on that. But with the Maharashtra government supporting them, I think it's done with. So it's no more a issue now.
And what's your view on competition online? Because most of the people now prefer to watch movies at home on Netflix or Amazon, and there are tons of them coming. And now you saw recently that within a matter of few weeks after releasing, the movie is released in this thing, and with how even big budget movies like
so that's what
flopping.
So that's what I was saying, that we are taking deriving our analysis of the Indian consumer behavior or preempting it based on what is happening in the US markets. See, there's a lot of singularity in the way behavior across the globe is shaping up. We are moving to a very kind of a similar kind of trends. So considering that if in the US markets there has not been that much of a concern with Netflix and the other OTT offerings, I think our channels will evolve out here, marketing strategies will evolve. So what happens is, like, you have a 2.0 of Rajnikant being shown across a large number of screens. So it's a 1 week offering, okay, where much of the movie gets monetized. So keeping these kind of, the markets will evolve.
Okay.
Right? So given that, I think that these will sustain.
Okay, what about you, Samir? What's your view on the cinema distribution company?
So I think it has a space because if you see, PVR has taken a very aggressive acquisition way to expand into even within the bigger cities on the boundaries and smaller towns. So I think they have re-strategized and bringing a new sub-brand for a tier 2, tier 3 places. But I think the main problem with PVR is this acquisition spree has gone too aggressive, and this has stretched their books. And any kind of a expected revenue meet, which they are not able to get through internally also, will worry their again the debt service. So I think over there that's a hang over them. Inox, I see it going much more organic way. And I think over there that's much better if you really want to play into this. But otherwise, I don't think so. This is a sector to be in.
Okay, not the sector to be in. What about you, Hari? What's your view?
We like PVR, I would broadly agree that this is not probably the greatest sector, but PVR we do like. See, we do believe that there is a space for the Netflix and Amazon Prime, and there is a space for a PVR. Because PVR is not just about a movie, I think it's about an experience. And PVR among the distribution companies have managed to create I would say, fairly good ecosystem. If you go to a typical PVR outlet, I think the ecosystem is among the best if you compare to the other ecosystems. Yeah. So I think to that extent, I would believe that PVR definitely has done a good job. But in my view, what we have scratched is just probably, I would say the surface of the entire market. So there is a huge market ahead, and depending on how aggressive PVR is, I would believe there is a large market for PVR to scratch. So yes, debt is a worry. They have expanded quite aggressively, but I would believe purely considering the potential that this sector has, and I won't really consider the Netflix as too much of a big risk. We would be positive on PVR.
Okay, so that's the view that's coming in on the cinema distribution company. And the final stock that we want to talk about is basically, we've seen that large caps have managed to do well. The mid caps haven't played that much of a catch up this time around. Which is the stock in the mid-cap arena that our guests like, and that's something that we will discuss. So I'll start with Samir. One mid-cap stock that someone should accumulate for a slightly longer term perspective.
So I think mid-cap should be for a longer term, whether today or on the rally. One is the Thesis Networks. Okay. We've recently started buying in it. The valuations are around 16 times. Average trading valuation has been around 25, 26. It's basically into network equipment. They're into the hardware of the IT end. And their main revenue growth now is coming through fiber optics. So Sterlite has given them recently an order of 120 crores. They do a 200 to 20 crores revenue quarterly and make 100 crores profit annually. So, and their cash, so they have a cash around 300 crores. So I think that's one place where we like the prospects, and they are very heavily patented into the 5G technology, the hardware requirement in India. So I think that has given them a leg up in the whole competition.
Okay, what was the reason the counter has corrected so much from the top? Are there any concerns on the counter?
So the concerns mainly which we saw the books, we didn't find much. The other concern was there were a lot of HNI crowd in the holdings, which got out at the downfall, and then they were able to sell out at a lower prices. So I think other than that,
what's the outlook that the management has shared overall? What's their expectation of the business?
So their expectation is a growth of 30 to 35% annually on the both bottom line and on the revenue. But we give it like a 20-25% kind of a discount. So that's why we are able to help the downside over there. And that's where we saw that cash rich has been the status throughout right now.
And if someone's investing, what's the key risk that they should watch out, and what's the valuation like you said?
Key risk is the order execution slowing down. If the fiber optics like Sterlite technology slows down, so that impact goes to them. So they are like a tier 2 supplier to the tier 1 suppliers. So any kind of slowdown eventually on the order execution, that is the main risk over here.
Okay, that's the view that's coming in on Thesis Networks. What about you, Vinit? Among the mid caps, which one do you like?
So we would, given the mid caps, we would like to buy stocks which have got relative strength and good sectoral outlook. So when you look at the paper space, I think there is a huge pricing happening in the core of the end product, and one play out here is JK paper.
Okay.
So what is the advantages of JK paper is that today in the environmental issues, they have a ready forest for agriculture, and they've got 133,000 hectares of forest land which they can use for farming, and nobody of the other players are that well having an ecosystem. So that is one positive. Two is the pricing has gone up really aggressively, and the landed cost of paper and domestic pricing of paper, there's a huge differential. And these companies have got good distribution reach, and they've done capex planning very astutely. Okay. So they picked up Sirpur paper, and then they are doing another expansion which will come up in 22. So you got a good visibility for 5 to 7 years of 8 to 9% kind of volume growth. You can add little more pricing growth, but pricing, we don't want to go out too much out into the future. So given all these things, I think there's a lot of headroom for EBITDA expansion.
And what about valuation? How does it trade?
It's about 3 times EV by EBITDA, and it can go to...
Which is fair?
Which is...
In the paper sector?
Yeah, 4 to 5 is like for the largest player in the system, 4 to 5 is good enough.
Okay. What about you, Hari? Which are the stocks? Which is the stock?
We like Dewan Housing. I think it's been in the news for all the wrong reasons. But I think a couple of things are working in favor of Dewan. I think number one, if you look at pure valuations, I think it's about 4.5 times earnings. So probably it's the cheapest that I remember Dewan Housing in a long time. But there's also larger fundamental reasons. See, the big problem in Dewan Housing was that there was this huge maturity mismatch that they had at one point of time. To a large extent, I think they addressed that. With the recent debt issues, they have reduced the amount of CPs in their books. So the extent of this mismatch has been largely reduced. I think last quarter there has been some amount of a slowdown as far as the demand is concerned, but that is more because a lot of realty companies were in stress. I think that should probably be behind. So we expect the next 2 or 3 quarters growth should come back, and I think margins the company should probably be able to maintain. So I think at about 200, 220, we see limited downside risks, and probably if you're willing to hold for about a year and a half, slightly medium term, I think it's a very good play in the housing.
You think that the worst in the NBFC is over now?
See, it would depend, there are still a lot of very shaky NBFCs, and assuming that the NBFC is not like ILFS, where it was a real scam that was going on underneath the infrastructure company. So as long as it's not anything like that, I think it is actually the time to buy NBFCs. Okay,
so that's the view on the mid-cap space. JK Paper, Thesis Networks, as well as Dewan Housing are the stocks that we spoke about with our guest in this show. But with that, it's a wrap on today's Hot Money. Samir, Vinit, Hari, thank you so much for coming in for the show today. Ask BQ comes up next. Stay tuned to Bloomberg Quint.